This is the daily video exchange for the 6th of July. Another jobs disaster report, but will this translate into a loss of confidence in the stock market? Hello everyone, Adam Hewison here, co-founder of MarketClub with your midday market update. We've got lots of going on here, but looking at the way the markets closed last week on the euphoric news from Europe, or the supposed euphoric news on Europe, and where we're closing now is a different story. And I think yesterday, let me just close this in a little bit so we get a closer picture. Yesterday, if you remember, we talked about a couple of things. This is the S&P 500, and we talked about this particular line right here as being a dark cloud cover, in Japanese candlestick terms, cover. And it was confirmed with today's strong move down. And this really puts kind of like a lid or a top on this market for the time being. As you can see, we are very heavily overbought. We've turned back down to the downside, and I don't think it's going to stop right at this level either. If we clear the screen and go to our weekly charts, which are very important in my mind, if we put in a weekly chart, you can see that this market is looking very heavy. First weekly loss we've had in over 2 weeks, almost 3 weeks if you can count this week. And it, to me, is like we're rolling over one more time. Also, scope this out just a little to get some more data. Year to date and 1 year. So this gives you a better picture. And what it looks like to me is this way. So here we are, we have the move up, obviously a nice move up from these levels, from the lower end of the Donchian trade channel to the upper end of the Donchian trade channel. We came back down to the lower end, and then we came just to the midpoint, and now we're seeing this reversal, which is this particular week. And look at where we are in the overbought, oversold cycle. So we definitely have gone from an oversold condition, which took us basically about 6 or 7 weeks to get up, to the overbought condition. Now the question is it going to take us 6 or 7 weeks to get down to another oversold condition? And it takes a lot to make these markets go to these extremes. And when they do, you want to really pay attention. Now you can stay overbought, obviously, for a long time, but the reality is this market is beginning to look very tired. And I think that's the key thing to look at. Plus, our monthly trade triangle is still negative on this market. So we'll have to see how that all plays out. So let's go on to the next market. It is Friday. It's the 6th. We're coming to the end of the week. I think a lot of people are very disappointed with the market action. A lot of the people who are bullish on this market are very disappointed with the fact there's been really no follow through on the upside. As a matter of fact, the Dow is also down for the week, as is the NASDAQ, as is silver, as is gold. Copper's down. The euro is dramatically lower. Crude oil is also lower for the week. The only market that's up is the CRB index, and that's because of the strong grain markets, but that's been tempered a little bit with the downside pressure in crude oil. So let's go to our next market. And the next market we're going to be looking at is going to be the euro. Now, this is what we talked about. If you remember the euro, we said the 124 level was a very key level, and the fact that we just broke down below 123 indicates this market's in some serious trouble. We have to go quite a ways back to see where this market was last at this level. This is, again, on a weekly chart. So we're looking at the next level is somewhere around the 120 level where this market should find support. But nonetheless, if you look at our monthly indicator, it's been negative from 139.69. So again, we've been short, and you can look at the same number right here for quite some time, negative on the euro, and it's working out well for us. So this is a game with trade triangles. We urge you to look at these trade triangles. They're very, very powerful, and they can help keep you in trades. Much like if you look back at the S&P, for example, we are negative on this. This is why we couldn't get excited about this market on the upside, because we had a negative monthly trade triangle. Tends to be the longer term trends. And look at where you are on the weekly. Very overbought on the weekly, so I think we could see this market come down also. So let's skip to our next market, which is going to be the NASDAQ. The NASDAQ basically is still pretty much the same pattern there. You can see on a weekly basis we're lower for the week. And again, we're just turning on the downside again from the midpoint of the Donchian trade channel. Going to our next market is gold. Gold has been a huge disappointment for the bulls, no question about it. It really continues to erode. And if you look at this market, really it's been going sideways for for quite some time. Certainly for the last 8 weeks, no excitement for the quarter, for the last quarter, Q2 rather, it was down 3%. So there's no excitement now to buy gold. And you think this would be the time everybody wants to buy gold. Our trade triangles have just gone to a -100. We're lower for the week. Not a lot of reasons to get excited about this market right now. So silver, much the same picture there. You can see it strong down. This is a weekly chart we're looking at again. You can see the weekly right here. And you can see the action is not so good on that. The lowest weekly close we've seen recently in this market is 28.92, and we're 27, excuse me, I beg your pardon. The lowest we have seen this market close is 26.81, and we're 27 and change right now. So we could actually see a new low close in silver if we get bombarded on the close. And I'm not sure who wants to go home long this market over the weekend, knowing what can happen in both Europe and also here in the States. So again, the jobs number was really burst the bubble for the entire markets, I think. Here we are, the Dow, and you can see the Dow right now is very, very interesting. It's down for the week. We closed last week at 12,880. It's currently trading at 12,744, 714 as a matter of fact. So there's another new low there since we did a report. So, but the interesting thing, if you go to the Dow, I'm going to go back here. I have actually created a sector for the Dow 30. Just you can see, if you close that, you can see half the markets are in a negative mode, and half are in a positive mode. The only stock that's really is Walmart's is a plus 100. But you've got Hewlett-Packard on the other side going minus 100. So that's down quite a bit today, almost 3.5%. So let's go back to our regular portfolio, and we'll go pick it up where we left off on the Dow. We'll go to crude oil, and crude oil is basically really, it's given a lot back in a very short period of time. If you remember, we were very euphoric on the upside because of Europe. We were under the 80 level, which we said historically the crude oil tends to rally when it's been under 80, and it did in fact do that. But look at today's action, or this week's action rather. It looks as though we're going to close lower for the week. Last week we closed at 84.82, and we're currently trading at 84.55. So you can see we're actually down for the week, and this is going to create a doji, which is not a good sign, and I think it's a equilibrium, but certainly the bigger trend, the monthly trend, which is what I really want to emphasize here, is still negative from 97.37. It's currently trading at 84.55. So another positive trade in the monthly column. So let's go to our next market, and this is the CRB Reuters Jeffries Index. Now this is the only market that we track that's closing higher for the week, and it's closing higher for the week because of the grain markets, which have been on fire. We covered this on the show last night, but the corn, wheat, and soybeans have been really on fire. We've seen a little bit of profit taking today and possibly a reversal, but we'll be looking at that just a few moments. But right now we have a plus 60, which is a trading range. So I would say probably between the 295, which is about a Fibonacci retracement from the highs here to the lows. So again, these Fibonacci retracements are very powerful, and if you don't use them, you may want to look at it. So we're going from the highs here, stretching all the way down to the lows, and you can see we just about hit it right there. I think it's, I think get this, adjust this a little bit here. So there, 295.82. That's where we pretty much got very close to that level. So that was the reversal point that we saw on this market. So let's go back to our next market, and that's going to be copper. Copper again negative on the week, down 350 was the close last week. We're currently 342, 341.70. So you can see that's not acting very well either. Again, these markets aren't oversold yet. They still have room to go. Plus 55, mixed bunch in the weekly and the monthly, but overall we have to side with the monthly, which is right here, and that's short from 359. So let's go to our next market, and that's the corn market. Now the corn market is obviously, it's been on a tear, and this is December corn. It's weekly. It's closing up dramatically for the week. However, if we look on a daily basis, you can see we're seeing some profit taking coming into this market. But for the week, it's still very, very positive. One concern I would have is the momentum, and that is sometimes when you get divergences, you want to pay attention to them. So here's the divergence we see building here. And see how that goes down like that, slopes down, and prices are sloping up. So you've got prices going up, divergences look a little bit soft, but it's still too early. It's a very, very big market, and you can see the move dramatically higher. And of course, we are long on the monthlies from the 575 level and 691 last, and 544 on the weeklies. And the weeklies are what we trade the grains with. Anything to do with commodities, we trade basically the weeklies and the weeklies and the dailies. So let's take a look at our next market. Let's clear the screen and take a look at our next market. And the next market we're going to look at, if we're lucky, is going to be either wheat or corn, wheat or soybean. So here's a big move down, a lot of profit taking for the weekend in this market. However, it's still positive. We could see some pullback, which is not unusual in a bull market, but this has been a straight up vertical run from 660 to 850. So I think it bears some consolidation, as they say. Same thing with the beans. The beans have had a nice move up. We've probably gotten, let me just do something really quickly here with my illustrator. If we just draw a line, continue this line down here like this. I'm going to change the color because it's yellow. You won't be able to see that. Let's do that. Let's go back to it. So if we just follow this line like this here, so we go from the lows here, let's say 1250 to 1400. That's 150 points from the 1400. So 1550 would be probably where we could see this market go, which is right around here on a measured move. In fact, let's just clear the screen and see what in fact the high was in that particular day. So here we are. Take this off and let's just go right here. So the high was in fact 1529 and 1526. So it didn't quite get to the 1550 level we were looking at, which would have been right this line here, but pretty close. So that was the measurement. So let's see how that plays out. But a plus 100, strong upward trends. But hey, this is Friday. It's the 6th of July. Hard to believe we're in Q3. But maybe what you want to do for yourself in Q3 is to give us a call for our one-on-one Market Club coaching. You'll be amazed at how good this and how this can help you, not only in stocks but in other markets too. But the question you have to ask yourself today is, one-on-one Market Club coaching, as personal coaching, right for you? I think it is, because do not have coaching, it's kind of like, Wimbledon's on right now. Now, do you think Federer doesn't have a coach? He's the best tennis player in the world, but he has a tennis coach. Djokovic, great tennis player, has a coach. All these guys have coaches. Now, you think with the level of tennis they play, you wouldn't need anybody. Well, everybody needs to have someone to help them just refine their own techniques. And this is where one-on-one Market Club coaching can help you. So give us a call. It's a free call, 877-219-1482. And best of all, it's a free consultation. So you've got nothing to lose and everything to gain. Hey, this is Adam Hewison for Market Club. Have a great weekend. I'll see you next week. I'm heading up to Maine, and I'll be broadcasting from my office up there. So have a great weekend.